Let's take a look at those names with Scott Nations, President and CIO of NationsShares. First up, Scott, is Ford. What do we think of it after its recent rise?
Tyler, Ford is a buy. It's going to be the leader in the EV space, even though we love to talk about Tesla. They just reopened the order book for their Lightning F-150 vehicle. They just opened it yesterday. They had to close that because they were trying to align supply and demand. So they're going to sell more of those at a higher price. They're going to raise the price anywhere between $6,000 a vehicle and $8,500 a vehicle. That's wonderful for a vehicle that was already immensely profitable. They struck a couple of important strategic deals to help their supply chain. And they're going to end up making 100 times more EVs this year than Lucid, even though their market cap is only double that of Lucid, and with a forward PE for Ford of 8 versus a forward PE of 60 for Tesla, Ford is not only going to be a leader, you're going to be able to buy it at a bargain. I mean, Tyler, it may be sexy to own Tesla stock. It's going to be profitable to own Ford stock.
All right, that's the Ford view. What about Starbucks?
Starbucks, a little bit different situation, Kelly. Affordable luxury, maybe not so much. In-store traffic was down just over 4% in June. And Starbucks has a problem. Are they going to raise prices to maintain margins? Or are they going to take a hit on margins and a hit on the bottom line? And they're not alone in the space. Dunkin' is making a big push in the pumpkin space coming this fall. That's not really a flavor profile I like, but a lot of people do. And so Starbucks isn't going to have it to themselves. The company is wonderfully managed, but with a PE of 28, this is a hold. I would not be selling, but I wouldn't be adding to anything if I already owned it.
All right.
All right, let's move on to the last one, which is Penn National Gaming or Penn Entertainment.
Penn Entertainment now, it's up a ton today in sympathy with the parent of DraftKings. But customer acquisition for all of these names is still a tremendous problem. And I think the problem for Penn Entertainment is they're trying to solve customer acquisition as a technology problem rather than a sales problem. They've missed earnings 4 quarters in a row, earnings estimates 4 quarters in a row. So it's kind of a fool me once sort of thing for Penn Entertainment. This is a sell. It's wallowed to get off the bottom, and I would sell it here.
All right, Scott, thank you very much. We appreciate your opinions on those 3 stocks, Ford, Starbucks, and Penn Entertainment.